Calgary housing market is slowing down. Supply is climbing, demand is softening, and buyers are gaining leverage. Today, we'll unpack the September 2025 numbers, show where pricing is slipping, explain why inventory is building, and most importantly, answer the question on everyone's mind: is this a good time to buy? So stay tuned. Let's start with the facts. In September, total sales across all property types were about 1,720 units, while new listing jumped to nearly 3,800 units. Active inventory sits near 7,000 homes, that is 36% higher than a year ago and well above long-term averages. The sales to new listing ratio is around 45%, and months of supply has climbed to about 4 months, the highest since early 2020 before the boom. Calgary has moved from a clear seller's market towards a balanced market, tilting towards a buyer's market. Condos are feeling it most. September saw only 401 sales against 924 new listings. Inventory is piling up, sitting near 5 months of supply. Only about 43% of new condo listings are selling. Days on the market is roughly 52 days, and the benchmark price has slipped from 331,000 at the start of 2025 to 323,000 now, down 6% year over year. This isn't a crash, it's a slow grind as choices expand and buyers take their time. In practical terms, condo buyers have leverage, more inventory, longer days on the market, and room to negotiate. Sellers must price sharply and present their condo in a way that it stands out. Row and townhomes show similar, softer dynamics. Sales are lower than the last couple of years. New listings are up and inventory has climbed up to around 1,100 units. Months of supply, 3.5 months. Classic balanced territory and days on the market around 44. The benchmark price has drifted from $445,000 in January to $437,000 now. Again, not a plunge, measured easing with more negotiating room. Detached property sector remains the most resilient. Prices hover around $750,000, basically flat year to date. Still, the shift is visible. Sales volumes are softer, listings are building, and there are around 3,200 units detached homes on the market. Months of supply, 3.7, and typically marketing time is 4 to 5 weeks. Some districts, especially Northeast and East Calgary, are now seeing visible price adjustment. Strong product still sells, but buyers have options. Why this is happening and why it feels different. So there are 4 big drivers. The first one, supply is greater than demand. A wave of new listings, including record numbers of new builds completion, has added competition. Resale homes are no longer the only option. You're also competing with the new construction and purpose-built rentals. Secondly, population tailwind has eased. Slowing immigration, fewer temporary foreign workers, fewer international students, and lighter interprovincial migration has cooled the demand. The third one, rates and affordability. Any rate cut helps, but it would take meaningful decline to ignite a surge of new buyers. Affordability is still tight for many households. And the last one, buyer psychology. National headlines about price decline set expectations. Many buyers are waiting for a better deal, and that waiting can expand the soft patch. Now, what is the 6 to 12 months outlook for the real estate market in Calgary? Through fall and into early 2026, expect elevated inventory and continued single-digit price declines across most segments. Not a crash, but a grind. Condos will stay softest. Row and townhomes balanced but easing, detached relatively firm, with pockets of weakness where inventory is more. However, beyond 2026, as today's stock get absorbed, a tighter market can stabilize prices and set up a healthier recovery into 2027. When month over month gains reappear, sentiment can flip quickly. Now the biggest question that everyone is asking, is it a good time to buy? And my answer is yes, if you are disciplined and thinking long term. There are four things that you should focus on if you are a buyer in Calgary market. Be clear on your purpose of purchase. Keep in mind that you will keep the property for 5 to 10 years. This is not a flipper's market. Second, target the listings that are in market for some time. Target vacant units, terminated real estate properties, and listings that indicate that they have motivated buyers. Third, negotiate the total package. Uh, Price is important, but also flexible possession and inspection findings. And the last one, know and understand the market of the area where you are planning to buy. For example, condo buyers, especially in northeast and east of Calgary, have the most leverage. Detached in the west is tight. Terms may matter more than the price. How will it look for sellers? If you need to sell, act sooner. Price to today's market value. Stage your property well, fix any small defects, and be first to adjust if slows or stall. In districts where there is a 5 to 6 months of supply for your property type, presentation and pricing discipline are everything. Remember, you are competing with builders too. So Calgary market has flipped from frenzy to fundamentals. Pricing drifting lower, inventory rising, buyers back in control. For buyers and disciplined investors, this could be an opportunity. Run your math and negotiate hard. Think in years, not in months. So that's all for today. Thanks for listening, and we'll see you next time.